Some more major tech layoffs happening after a bleak 2022 industry-wide when tech layoffs were up more than 600%. And now new layoff announcements from Amazon, Microsoft, Salesforce as well, all as the Treasury Department warns that in less than 24 hours, the U.S. will hit its debt ceiling, and it's calling on Congress to take action. University of San Diego finance professor Dan Riccotto joins us live. Dan, thanks for being here. Some big money headlines today. Of course, those tech companies laying off tens of thousands of workers, all while prices for wholesale goods and services are dropping much more than expected. So is this a sign of something bigger, good or bad?
Yeah, it is. Hi, Nicole. Thanks for having me. Mixed bag. Listen, the Fed all along has a strategy of a couple of things, right? They want to lower the price of your home. They've done that. They want to lower the value of your 401k. They've done that. And the last piece now is jobs. They want less jobs, less demand in the marketplace for workers. I know it all sounds crazy, but that's the whole ingredients. That's the mix that they need to fight inflation. So that's what we've got. They're successful on the inflation front, as you just reported, starting to come down a little bit. But yeah, we can expect more weakness in the job market.
All right, so the good does come with bad there. Other big headline we're watching, of course, Dan, the U.S. expected to reach its debt ceiling tomorrow. What does that exactly mean for the average American? We hear that, but what does it really mean?
Inflation, Ukraine war, less jobs, and now we've got this to worry about, Nicole. So it's simple. It's the nation's credit card. You and I can call MasterCard, we can call Visa, and we say, look, we need a bump in our credit limit. And if we're good customers, we get one. There's 535 individuals in Congress who need to approve the nation's increase in our debt, our credit card. And they can only do that. It's their job to do. So for the average American, at the moment, you and I are bystanders. We're on the sidelines. We're going to watch this kabuki theater play out. It could take days. It could take weeks. It could take months. The real impact for you and I right now is in the markets, because markets hate uncertainty. And to the extent this creates uncertainty, not good for your 401k.
All right, so potentially more bad news for the 401k there. Dan, you said it could take days, could take weeks, could take months. Yeah. We know Republicans are vowing not to vote or voting to extend this debt ceiling. Do you think, though, that they ultimately will vote in favor of expanding the debt ceiling?
No question, they will. We go through this every couple of years, whether the Democrats or Republicans. You forget the political party. The reality is they use this as a negotiating tool, as a leverage tool, a chip, if you will. But at the end of the day, Nicole, rest assured, they will raise the limit.
All right, you heard it right here. Dan Riccotto, as always, we thank you.
Thanks.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.